Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the Forex market wrap. We're going to highlight the news that occurred this week and the charts that we looked at in our week ahead analysis video. So jumping on to the news, then we had lots of data. We had lots of high impact data or red letter data, and we talked about in the week ahead analysis video that this can often lead to higher volatility, which is exactly what we had this week. And in those conditions we can often see the US dollar and yen perform pretty well, and that's exactly what we've had this week. Now the yen, for sort of different reasons, we had the Bank of Japan intervene in the currency for the first time since 1998. So that was fairly significant in the markets this week. We also had sort of risk of sort of nuclear deterrence being used by Russia, which has also added pressure to the risk sentiment in the market. So that's why we've also seen the volatility move higher as well. So dollar and yen had a pretty decent week this week due to a number of different factors. In other news, we also had lots of central bank data. We had the FOMC statement. We had a hike to 3.25% from 2.5%, and the press conference from the US wasn't as hawkish as what we're used to, but they did talk about fighting inflation still and needing to hike rates further. Some economists are now seeing 5% federal funds rate by the end of this year, so still some way to go there potentially for the US dollar. We had the Swiss National Bank rate as well. They hiked out of negative rates for the first time since 2011, so some big data there, although this was highly sort of planned. So the Swiss franc didn't strengthen as aggressively as what some expected. Some were actually expecting to see a 100 basis points move here because of them trying to front run the ECB, but that didn't quite happen. We then had the Bank of England come and hike rates as well from 1.75% to 2.25%, talking about again needing to hike rates more aggressively. So lots of data this week that really added to the volatility in the market. Jumping onto the dollar index then, what we talked about was the consolidation here, okay, and we talked about the fact that price was likely to break out of this consolidation and probably search for higher prices towards this 110 spot 80 handle or the 111 spot 31 handle, which were the September 01 lows. Now we actually broke out ahead of the FOMC data. The FOMC candle is actually this bearish sort of pin candle here, and I think everyone thought that the dollar had found a top at 111.31, but obviously the Federal Reserve is still going to hike rates aggressively. So we've broken those highs now, and we've broken into sort of the 112 handle, which is very, very aggressive. And we're expecting probably higher prices here for the dollar now. That was also reflected on the euro US dollar chart. We can see here again consolidation, and we talked about price breaking out of the consolidation to the downside below 0 spot 99.55 and even towards 0 spot 98.63, which were these lows that were formed here. And that's what we had this week. We consolidated, we broke out, we've continued to push to the downside, and now this trend is starting to develop again. We may see continuations down to the next level of support, which is this 0.9600 handle. Going on to pound then. So pound, another market we felt could trade to the downside. Had this consolidation here as well. Price broke that to the downside, retested the 13.50 handle, and we've rejected, and we've continued that downward pressure now. So not a lot of room to the downside here in terms of data. Not a lot of data to the downside, I should say, actually, for pound US dollar, but we're expecting further downside. So if price maybe comes back retest the one spot 12 handle lows, then we could expect a continuation from there. Pound yen then. So pound yen was one to watch this week. We had pound weaker and yen getting a little bit stronger, and we can see here that we'd broken the 164 lows, which is the area we were expecting sellers to come back in again. So if you did look for the short opportunities around 164, you would have had a really great week, because prices dropped quite significantly from that point. It's around 600 pips from that point. So very aggressive move to the downside there. This was the Bank of Japan announcing they'd intervened, so we had this really large range in day, and now the momentum has also continued below the 160.65 lows, so expecting further downside here for pound yen as well. I'm going to leave it there. I hope you enjoyed all the content this week. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.